Charlotte McLeod with the Investing News Network, and here today with me is Mercenary Geologist Mickey Fulp. Thanks so much for joining me today.
Thanks once again, Charlotte.
Of course.
Seems like we just did this.
It was. We did see each other just last week at Mines and Money in New York.
True.
But a lot has happened since then, I think.
Has it? Yeah.
A little bit. We saw gold yesterday take a fall below $1,300 an ounce. What happened there?
Well, it looked like the Fed came out and made some pretty hawkish statements about interest rates. So the midterm bonds, specifically the 10-year bond, went higher in interest rate, and the dollar, of course, followed suit and went higher, and gold got slammed about $15 yesterday.
Yeah.
On New York Open, basically,
right.
Or a little bit before New York Open it started.
Okay, so many people see 1,300 as a key psychological level for gold. I think yesterday was the first time we saw it go below that level this year. So does that spell trouble for gold this summer?
Well, it could very much spell trouble, and you're right, it's the year-to-date low. It was lower again today. It was $12.88 when I got up this morning, so it lost another $5 or $6. You know, it's broken that psychological resistance, and I haven't really looked at 50 or 200 day moving averages, but I would imagine that it broke those too. And so, yeah, it does not bode well for gold this summer.
How should investors be feeling right now? Should they be worried about further gold price declines, or is this a buying opportunity?
Well, I don't worry.
Yeah.
You know, I follow the old Alfred Newman Mad Magazine. What, me worry? I don't do that. There's nothing you can do about it. So I don't really see the sense in worrying about something you have no control over. You just need to deal with the paradigm you're given. So, you know, it's certainly in gold stocks. This could be a pretty nice buying opportunity. That said, we've got summer doldrums coming, and that's even usually a lower period, but I'm looking at the price of gold right now, and I like to buy gold on dips, and if this continues till the end of the week, I'm probably going to pop over to the bullion exchange and buy a couple of rounds of gold.
Okay, I like the optimism. You mentioned the summer doldrums right now, and you've spoken in the past about how summer is typically a slow time for the resource space in general. Are we gearing up for another slow summer? Is there any spots we might see more activity?
It's always really hard to say, but yeah, the summer doldrums is usually not only a low season for metal prices, but for market activity. You know, by July and August, it's hard to find anybody in an office in Vancouver. Toronto, they're all in their cottages, and New York, they're all in the Hamptons, and let alone what goes on in Europe, where those people usually take 6 weeks off. So I think we're probably in for a long, hot summer.
Okay, so investors, should they take a break right now as well, or are there things they should be doing?
Well, I think if you have capital, you should deploy it discretionarily to stocks that are beaten down that have good fundamentals. Look at this simply as an opportunity, much like tax loss selling would be in December.
Okay. Well, that's all from me today. That was great. Thanks for coming again. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Mercenary Geologist Mickey Fulp.